Hi investors, I am on a 12-hour drive to Bozeman, Montana right now. Got my Montana t-shirt on, and I, having, well, really nothing else to do, thought I'd make a video. I've just been kind of daydreaming about trading strategies and so forth. And I want to talk to you about a concept I rather humorously call shaking out the shoe clerks. This is a term I picked up around the poker table many years ago. I used to play with a friend who was quite a character, and he would make a big bet, and he'd say, "Time to shake out the shoe clerks." And when he made that big bet, boy, anybody who didn't have a real hand quickly dropped out. And we want to have shake out the shoe clerk action in a cup with handle in two areas, in the bottom of the cup and to a lesser degree in the handle. So let me explain. You've got the cup is being formed, it's working down the left side, and then it starts to flatten out. And we've lost some stockholders as it's come down, and then it starts to flatten out. Maybe some traders nervously start buying, and then what we want to see in the bottom of the cup is a wicked, nasty, unexpected shakeout. We want to see a wide-ranging, plunging red down day, or 2 or 3. And what does that do? That shakes out the shoe clerks. It shakes out the weak hands. And then, when we get a little bit of buying action, it starts working up the right side, and it can move up the right side expeditiously because those short-timer swing traders and nervous Nellies are shaken out. And it only takes, when you've squeezed out most of the sellers, when you've squeezed the water out of the towel, as Mark Minervini says, then it only takes a little bit of buying pressure for the stock to go up. So, and I don't believe William O'Neill talked about that, but boy, Minervini sure pointed it out many times during question and answer sessions on Minervini Private Access. Seeing a nasty shakeout day in the bottom of a cup was really a good sign. Ruined the attractiveness of the cup, of course, but it was really, you really want to see that. And in a fractal-like fashion, you also want to see that in the handle. So the stock works its way up to the lip line or close to the lip line, starts to handle out, and we want to see the handle droop a little bit. We want to see volume dry up. We want to see it quiet down, fewer shares switching hands. And in the middle of the handle, what we want to see is a more minor shakeout where there's just a nasty down day, and it doesn't really matter whether it finishes at the low end of the range or if it comes back up and makes a hammer. Probably actually be better a hammer because that's a sign of accumulation. But again, that shakes out those shoe clerks within the handle, those swing traders, those nervous Nellies that are not too confident about being on the long side. And then what we have left is a bunch of diamond hander, long-term position holders, etc. And then, like I said, it only takes a little bit of buying pressure, and whammo, I don't know, whammo, bam, whatever you want to say, the stock breaks out. And yeah, that's a concept called shaking out the shoe clerks. Look for it in the bottom of cup and handles. Look for it in the bottom of the cup. Look for it in the handle. All right, good luck in the market, everybody.